and gentlemen, first of all, welcome to this second webinar that we're hosting here with ArtofCo. We started this series because we want to help like fellow co-living entrepreneurs like we are. And that's why we started last time with, it's now the time for co-living. In the last session, we discussed kind of market trends, where the industry is heading and opportunities and scene. And today, once people understand that it's time for co-living, the first question is, what am I creating? What am I building? And how am I financing it? So there goes a question of business models and financial models. And it's kind of a really, really big topic that is not so much talked about in co-living or very openly.
Of course.
Of course, and we know why. So Fabrice, welcome to this webinar.
Welcome to everybody. Thank you, Guy, for this invitation.
You're very welcome. I wanna introduce you properly because I'm not sure if everybody knows you here. So, ladies and gents, let's give a round of applause here to Fabrice Simondi. Let me share my screen real quick. And I'm gonna show you. And I'm gonna show you this. So, in today's webinar, what we want to go through is kind of key topics around business models and co-living. We received around like 200 questions from you guys. And so we're going to focus on a few components: business models, financial performance, revenue generation optimization, cost and investment, and then yields. These are kind of like the large topics. What we're going to do is we're going to have a conversation for 20-30 minutes around these topics, trying to tackle all of your key questions. And then we're going to open up because we want to talk to you. We want to know like, what are your case studies, and what are the questions that you are having very specifically that we haven't tackled yet? Just as a proper introduction, Fabrice, you are one of the pioneers in co-living in France. You co-founded Coliv back in 2016 as the Global Association of Co-living Professionals. You've also been in the real estate scene for decades. You yourself have your own operations with Vitanovae. You operate co-living spaces here in Bordeaux, mostly like smaller model of like 5 to 15 residents per building.
Exactly.
And your specialty as an operator is to focus on neighborhoods, right?
Exactly. And we are also a mission company. That means we have some economic targets, but also some social targets in the neighborhood, which is about affordability of housing in this city.
Yes. You actually... is that correct? You're the first real estate company that's incorporated as a social purpose company in France?
In Coliving University, yes.
Yes. That means that literally like in your statuses, what's the difference for this compared to like a normal company?
For example, we have some criteria about affordability. We provide spaces with an average of 20% less about the rents. We have also carbon objectives in the construction we do. Then we have 2 layers. The business model is a very crucial point for us because we have business model as well, more a social model. Then it needs to be really accurate to be successful.
All right. So, Fabrice, let's dig in. I guess first of all, let's dig into the big questions, like what are the different ways in co-living to generate revenue, and what are models here? And maybe you could like talk about different models of operator versus investor and like the different categories.
Yes, what I could say, it's a real estate. In a real estate structure, we have always the same structure, which has one investor, one developer, and one operator. Then we are always in the same way for every kind of real estate project. What we see is generally we have 2 main models. One of the model is to be asset free and to be only operators, and many startups start like that in Europe and all over the world.
So first focusing just on being operator.
Exactly. Asset light.
Yes.
Then it was one of the most important model in the last 4 or 5 years now. And one other big model which is coming now and which is very strong is to be both investor and operator. And regarding the actual financial crisis, I will say this is one of the most resilient model in those days. I could say, for example, if you see companies such as Greystar, maybe you know it, they have the investment fund, which is based with Vitanovae Cambridge from Canada, and they are buying to the developers some assets, and they operate by themselves. We have the same as well in France with AXA, which is a bank. Then they have no debt when they buy a project, and they as well bought some companies to operate. We have as well, maybe you know Brookfield, which is one of the biggest institutional investor in the world, which in each country or area is buying some operators. This is one of the biggest model for the very big size. They generally operate a size of 10,000, at least 10,000 square meter per project.
Got it. Like, so it seems like a lot of people want to start co-living. And let's talk about like the way to get started as a co-living entrepreneur. A lot of people ask themselves, what is like the minimum in terms of beds we need, for example, to be profitable? What's the break-even point? What would you say to aspiring co-living entrepreneurs about these numbers?
What we've seen on the market is the average point is between 50 to 120 units, but it's really dependent on the stay. That means the mix between long-term stay and short-term stay. Then this relation is like a secret that all the operators could provide. But this mix gives something between 50 units to 120. And the idea is to be able to pay 3 people to manage an operating company, at least.
So for you, 3 people, the sweet spot for 3 people is 50 to 120 units.
Yeah, that's the model.
That's kind of like the sweet spot. And that's a model that's replicable. How does it look like in larger residences? Because you've also worked on some larger projects.
Yeah.
Is it the same ratios?
No, it's even better. That's why big investors are trying to have bigger places. I could say, for example, we have here in France a residence owned by Brookfield, and what they are providing are size between 1,000 unit to 3,000 unit. And in the 1,000 format, they have like 9 people to manage the place. Yes. That means less than 1 people for 100 residents.
And actually, so that's a crazy amount of number. Somebody, Stefan, just asked, like, for the 3 people that would get hired, what are the job titles? Who do you see in these 3 people?
Of course. First, the managing director, which really organize all the places. It's like a hostel director, I will say. And you can have 2 people, 1 people of the maintenance, for the maintenance, fixing the places.
Yeah.
And the other people will be like between housekeeping and community management. Then this is really a typical case, 3 people for 50 to 100. But you can see with this model, you have three people to pay for 50 to 100 residents. And with the bigger size, you can really reduce a lot the amount of people. If you have a good digital workflow, if all has been planned before properly.
Yes, yes. So, and I like the 3 roles that you said, right? Like usually we're seeing that's usually a managing director for a location. And then you have 1 person that's usually more in charge of maintenance, operational, and 1 more of community / also like residents.
Exactly. And maybe when I say 3 people, you can have external people for other kind of maintenance, cleaning. But the basis is generally 3 people. But of course, if you increase the shorter stay, you will increase dramatically the number of people. Then this is really this relation. Shorter the stay is, higher the people you will need, the expense will grow, but higher will be the revenue. And it's really depending about as well the location, because when we are speaking of 50 to 100 people, is it prime in downtown in the city, in the suburb? Then there is, as this is as well a very tricky point.
So let's see. There's one of the questions was like, what's the primary risk associated with investments in the co-living sector?
I think what we've seen by the past is really the operating risk. Most of the bankruptcy, the last bankruptcy were operators. And of course, this is really risky for investors. They are going to use three tools. The investors will have a long-term commercial lease, classical one. They can have a long-term commercial lease plus some fee on the activity. And the last model is managed contracts.
Yeah, or revenue share.
Revenue share.
Same thing. Yeah. And which of these three models, like, I mean, everybody at, for example, the Coliving Summit was saying they're doing revenue or like management contracts. But in reality, I think it looks quite different. What do you think? Well, what is the model that you, for example, are trying to push?
I don't push anything, but the classical system is a long-term commercial lease. And I mean, mainly all the investors like security. Then a long-term commercial lease provides them a fixed revenue and they know where they go. What they do now is they are okay to merge long-term commercial lease plus a bonus on the activity. But managed contract is really was invented by hostels, so such companies like Accor. Then they are using managed contracts. But when you have a managed contract with Accor, you are very secure on the revenue because this is a worldwide company with more than 6,000 hotels. But when you start a company, you have a low money, your capital is low, and if you want to get a managed contract, it's quite difficult.
So one of the primary risks you're really seeing is like the model of the operator. Like a lot of operating models, they need
has been bankrupted. That's the reality, because we had the example of Quarters in Germany. We had the example of as a collective in US. We had many operators which are in difficulties, and it's always the same story between the investor who want a yield to resell his product at the end of the story, and then this is a battle between the two.
Let's if we look into maybe like one question here, Anna was asking, like, explain management contract. Do you know what is standard in management contract? Like, how does it look like structurally?
That means you are like I will say you are like a service and real estate company. That means the investor take all the risk. He even employs the people, and you just advise him. You just advise him who to employ. You manage really the operation for him, but as a service. Then that means if you have a COVID episode, then the revenue will go down, and then the investor will be faced to this risk.
Very simple.
Yeah.
And then do you have hybrid contracts, right, where you can have like a fixed?
Yeah, this is a long-term commercial lease plus bonus.
Love it. So let's, like, we're talking about investment. What do you want to talk about? Yields or EBITDA?
About financial performance, you mean?
Yeah.
Yes, I think we have different KPI, which are really relevant for this activity. One is NOI. NOI is really the net operating income. This is used for hostel, and this is really the net revenue you can have from a residence. You have also the vacancy rate, which is a relevant KPI for Coliving. On January, in the main of the biggest in many big cities, so this rate is more than 90%. And we have many examples where the rate is over 95% in the cities. And this is really interesting for investors now, because if you think about real estate investment with the actual crisis, I will say housing sector is really an opportunity. When you are thinking about real estate with offices, with retail, it's the market. You have many questions about the market. What will be the retail in the next years? Offices with the visual, but housing market is really there. Housing crisis is there for a long-term period. Another rate, I think, which is interesting is EBITDA, earning before interest, tax, depreciation, and amortizment. And this rate in co-living industry should be between 15 to 30%. Then many startups have shown a rate or a project with an EBITDA of 30%. But sincerely, I've not seen many proven results, because to be at 30%, generally you have to be in a very prime place, location, with a very high pricing. Then I will say 30% is really goal. 15 is the lowest where you can be profitable at the end of the year. Another KPI, what I like, is EBITDA. Do you know about EBITDAR?
So EBITDA is EBITDA. I mean, I learned it a couple of days ago.
Yes.
But
before rent.
Before rent.
It's really the revenue you have before rent. And this should be like 40 to 60%. And the rent, if it's really depending on your model. If you have short-term rent, long-term, this is very important. But if you are, if the rent is between 40 and 60% of the revenue, this is an average. And another question, of course, and I think many of you ask this question, is about the yield. What is the yield? Then
the yield, yeah.
The yield, yeah. What is the yield for an investor in the co-living environment?
Yeah.
Then this question is very tricky, because it was very easy to speak about like 2 years ago, but now in Europe we have an interest rate of 4.50, then everything is changing. Then 2 years ago, this rate was between 3.5 and 4.5 here in cities in France. Then, but the interest rate was 1%. Then if I say that the yield should be at least 2 or 3% more than the interest rate regarding the location, the product, the quality of operators. That means between 6 and 8.
And is that realistic? What do you think of that?
It's very difficult today. That's why you see, I will say, so it's a good opportunity for very big investors, which are cash now. They don't need any debt, like I was saying, AXA. They can invest. They don't have debt. Then you see, with this yield, the building are less. The value of the buildings, with all the developers, have to reduce the price, and the only who can buy those buildings are people like that.
Yeah. There was a question also regarding investment.
Mm-hmm.
And that question was, do you see investors investing in the operational company, in the OpCo, or do they invest usually in the property? And like, how do you see co-living companies doing that?
It's what I was saying. I think the trend now is to be both. Not to be as a development part, but to be in the investment side and in the operating side. And the biggest one I know are doing both. And they are buying companies, buying operators to be able to invest and to control their investment. This is really the actual model. And the biggest operation signed this year are really these ones, those ones.
All right, like ratios. Somebody was just missed. Like, can you repeat about the net operating income? What was your stake on that?
Yes, the net operating income is really the net revenue. The revenue you are able to produce with the residents if you have deduct the cost, the direct cost of the resident taxes, a cost of cleaning, really the general cost. What is your revenue after that? And the NOI is really a KPI of performance, very used in the hostel industry, and I think which is a very interesting for co-living. And this can be for residents, but as well per room you are selling in the co-living industry. What is on your price, NOI per unit?
And for, okay, got it. For NOI, is there any specific like benchmarks or in terms of?
It's really,
it's hard to say.
No, it's hard to say.
So here, for example, like another question, Thibault, you just asked, do you have a benchmark of revenue per unit to target as an operator? So in short, like what is, maybe do you have a benchmark of revenue per unit to target? I guess it's really, how would you answer the question? Because I think here it's really dependent on a lot of things, your positioning.
Of course, if you are in a big city, small city, location, stay, short, long. Yes, it really depends so much on location. It depends on the services. It depends also if you stay 15 days, 1 month, 6 months, 1 year. And the idea now as well, I could speak about mixed use and short and long-term stay. The trend is to merge both, then to have like 30% in a short-term stay and 70% in a long-term stay. This is as well a number I've seen in many situations, in many business models. And it's to be able to optimize the revenue by a short-term stay, but with the limit not to have too many people to employ. And as well, in terms of functionality, if you, for example, you share an house with 15 beds and you have 3 tourists per week, it doesn't work. Then as well, the architecture, how it is built is very important. Do you have just a co-living with a shared kitchen or not? Do you have some independent units with common places in the building? Then the architectural model as well is very relevant regarding the capacity you have to optimize your revenue with shorter term stay.
Yeah. And if we define also like short versus medium versus long term, for example, in your case, long term is 12 plus months. All right. Or like, how would you define long term, short term, medium term?
Short term, less than 1 month.
Less than 1 month. So
medium term is between 1 to 3.
Yeah.
And long term is over 3.
Yes.
And this way, this is also related to the local laws. That means the 4 laws in all the country, which are urbanistic laws, fiscal laws, construction laws, and the convention between the co-livers and the owner, the contract.
I want to take a question from our dear friend Walter here.
Walter.
So Walter was just asking, in the hotel industry and other areas like office and retail, the yield per available square meter is often calculated to compare one project with another. Does this also make sense in co-living to compare projects?
Yeah. I think, yes, it could be relevant. I will say it's less sensitive about the collocation. I mean, if you are thinking about the house increases, then the market is larger than hostelry. But of course, if you have a model with a short-term stay, with a good yield on the paper, and you are outside of the city, you can have a bigger vacancy rate, which is also important.
Mm-hmm. And we were talking about vacancy rate inside of cities. It's usually below 5%, or around 5%.
For co-living, yeah. And for example, in France, in major cities, you are for short term, it's like 70%.
Yeah, 70%. We're getting a few more questions also around revenues.
Mm-hmm.
I know we had a little discussion before, so
Membership, I see. Yes.
Yeah, you see membership. What do you think about, like, just in general revenue? Does it make sense to focus on creating more revenue channels? We talked about, for example, doing short term is one way to increase revenue. Corporate offers is another one.
Mm-hmm.
Membership could be one. What do you think of these side income streams when you create a business plan? Do you take these into account, or you think they're marginal, you don't care about them?
No, I think it's really depending the resource you have to put to get these services. Then if you had to add 2 more salaries to get these services done for a few resources, that's not interesting. One of the main trends are as well the mixed use, that's merging different activities in the same residence. In the mixed use, I will say there is two kind of additional sales with the F&B, food and beverage. Some are opening like restaurants. They have a staff inside the resident which care about the co-living building. And some are merging co-living with co-working. And to me, the difficulty with food and beverage, if you want a good revenue and to be profitable with food and beverage, we say here that you have to make a turnover more than 3 million euros per year to have a complete staff. That means it's very consuming in terms of resources. You need to be focused, and the competition with food is very big in an area. Many people can open a restaurant. Many passionate can produce good foods. And co-working is maybe closer to co-living, because regarding the side of a co-working space, the same team, the one who manages the co-working, can be able to manage a co-living space. That's interesting. And one other aspect is, who are you targeting? Which kind of clients? And one other trend is to be targeting on many companies are targeting the corporate market, then to be able to offer place for people in relocation, in mobility, or to be organizing some retreats, some event for companies, merging a working area and merging co-living area.
The moment of silence. What do you think? Is there anything else that you want to mention right now? Should we open up the questions?
No, it's open the question. Yeah.
Okay. So, ladies and gents, we just free float for a bit, but we kind of would love to have some of you actually like share right now, like specifically regarding your projects. What are the questions you're asking yourself that we could try to like help out with? Anybody wants to go? You can just raise your hand or unmute yourself. Yep, Alex, let's go. Can you unmute yourself, Alex, or do you need help? 1 second.
It's called working. Could you hear me?
1 second, I cannot hear you. Give me a sec. Okay, Alex, can you try again?
Yes. Could you hear me?
Yes, super.
Cool. Hi guys. As we know, I'm very keen on technology. A simple question to Fabrice. Hi, Fabrice. Is how technology could transform our sector, our industry in the next 5 years? How is a key or just a commodity? Key means like 3 people you mentioned before, could be 2, just an example. Or, today we use the key, the regular key, the metal key, and then tomorrow we use them as smartphone. But there is no big value, or other technology you have in mind?
So you're saying like, what's the role of technology specifically related to the business model?
Obviously, yeah, in business model, obviously in the day-by-day operation value, both in money, in the business plan, but also in the value of your project, or our projects.
Got it. So, I mean, I can give my answer.
Yes, of course, Guy.
But I guess
that's your field.
Because like what we're seeing a lot is like usually like the usage of technology is like what we're seeing. There's different stages, right? And it depends on the projects, but usually like when you see starting co-living operators, usually up to 50 units is all like self-managed, very like MVP type of technology. And then it starts to then suddenly that you take there's this change where suddenly like you go beyond 50 residents, between 50 and 500, and then this is where you then use technology such as like a complete PMS tool or elaborate access control. I wouldn't say it impacts too much the business model at its core, but it can free up human time, especially when you scale up. How would you see it?
I think, of course, the technology the idea is really to automate all what you can automate instead of using human resources. But there is things you cannot automate it, like facility management, maintenance. This is finally a physical business. This is the place where you live. Then there is one part for all the commercial part, finding clients, contracting, signing, planning reservation, which can be automated. And that's true. It's quite difficult today to find a complete solution about that, because if you start to merge short-term rental, long-term rentals, manage payments, regarding as well the legal laws regarding the country where you are signing documents, this is quite complex. And today, most of the operators have several systems to do that. But there is some part really physical. I was thinking about cleaning, then you cannot automated cleaning. You need resources. This is a physical activity.
Mm-hmm. Let's see. Maybe if anybody else wants to put in the chat, if you want to go and ask a question. Maybe if not, we can take a question from the chat here. There was this question already asked before regarding management contracts. What's the average percentage negotiated with the owner? What do you think of that?
Between 20 and 25.
Between 20 and 25?
Yeah. Depending the size, the structure, the business model, and the kind of services you are able to provide.
Super. I'm gonna ask to unmute. Unfortunately, I cannot read acrylic. Yes. Hi. Do you want to ask a question?
Yes. Hi. Thank you very much for organizing this event. Very insightful. So my name is Sergey. I'm currently an MBA student in Barcelona, and I plan to launch the co-living business. I think it's really has a lot of opportunities and great impact. Well, my question regarding the payback periods, I also put it in the chat. So I was wondering, for the lease contracts, if there is an average payback period, considering that you invest in renovation the property, in transforming it in a co-living space and managing it?
So, sorry, because I was reading at the same time. In one sentence, could you repeat your question?
So yeah, in one sentence, what's the average period to reach the break-even point for co-living business, where you have a master lease agreement and you do all the renovation on your own funds?
That's the question. I think generally the best is not to do the renewal. I mean, the investor should, in the case I know, are paying everything. That means all the FF&E, fixed furniture and equipment, and OS&E. And then when you manage a building, it's completely ready to use. And by this way, the investor keep two value, the real estate value, but as well the commercial value. Then you have he has all the value of the business, but you keep the master lease contract as a source of services. Then if you start to pay all the FF&E on equipment, this is, to me, it's more adequate to have a long-term commercial lease where you keep the commerciality, you keep the business on your side, plus fees and the activities, for example. It's more relevant.
Okay.
Yeah, thank you.
Amit, would love to hear you.
Hi. Thanks. Very, very interesting talk. So we're looking at a new co-living startup and designing it from scratch. And we're playing around with two models. One where we have a kind of development co where we find the sites, develop them, and then pass them on to an OpCo that owns the sites. And another one where we're looking at a whole life cycle, because the whole life cycle is about 7 years. You think of finding a site, developing it, building it, and holding for about 4 years of revenue. Do you have any insights about whether it's better to split that up into an OpCo, PropCo, or to keep it as one?
You know, I will always say with the interest rate crisis today, it's very tricky, this question. It was easier for me to tell you in 2023 or 22.
Yeah, if you can make it work at these interest rates, then it's better, right?
Exactly. I mean, you know, as it's really been changing in 1 year, this huge rise of interest rate, we have to recalculate the model with this new input, you know. Then, I mean, both model could work if you are able to find an investor. But a 7 years period seems to me okay. Amit?
I just wanted to ask, do you know what you're finding investors are looking for as a rate of return? And we're looking at trying to achieve 25% IRR over a 7-year period. I mean, it's tough, but that seems to be kind of...
Yeah, 25, but it's tough.
Yeah. What would you say would be...
It's really, you know, the difficulty is it's really to compare with the quality of the project, the quality of location, the quality of the model. The size as well is very important. You will not see, it's not be seen in the same way if you are speaking about one house or residence of 25 beds or 10,000 beds. It's not the same if you have short-term or long-term stay. It's really, this question could be answered, but we have to go into details about location, about model, about sizing, about model of revenue.
I understand.
Yeah.
It's hard to get a very generic, unified answer.
It's not possible. And if you see as well the local regulation, if you are commercial or residential, this is as well very tricky with all the laws regarding Airbnb. There is some anti-co-living laws now as well in some cities. Then the location, local laws, fiscality are very important today to be able to answer you clearly.
Yeah, I understand. Okay, thank you.
Thank you, Amit. All right, let's see. Stefan, you've been wanting to share for a bit. Hi.
Thanks, Guy and Fabrice. Thank you for your work here. I have a question. Either of you, if you can answer that. Do you have some concrete numbers for an example of the 50 to 120 type of units and the 3 jobs that model could afford? What would be the exact gross revenue? And what percentage of that to allocate for those 3 jobs?
And
if that exists, and which is there a concrete example that I can look up or study or something?
For 100 beds, you mean?
Yeah, or whichever within that range, 50 to 120, the ones that can afford to hire three different roles, basically.
Three different roles. When I was speaking, for example, of 50 to 120, I could tell you with 100 people, if you have a 20 to 30% maximum in a short-term stay, like 1 week or 1 month, then 100 bed with this 25% of short medium stay rental could be able to provide a mass of 3 people, and their cost will be between 15 to 30% of the turnover.
15 to 30%.
Some question. Sorry. Yeah.
Okay, and
question about the community. I agree, Michael Constantino. We are not speaking today a lot of community because it's really focused on the business model. But of course, that's a relevant point. And I think, Guy, you've been speaking a lot about community.
We've been doing some things. and just for fun, you want to add one thing?
I just want to finish the question. And that model, do you have a concrete example that is also profitable at a desirable percentage of return on investment? Is there an example that you can bring?
Yes, we have many examples like that of
Okay.
100 beds. I know, for example, have you heard about Babel communities? Babel?
No.
Have a look on them. It's a very good model. They start like 25 years ago. You know, I really like some of the models when they have a 25 years track record, because you are sure they are using the best practice. But
Right.
all those older operators are now going to 200, 300, 400. Then there is really a range to have like 5,000 square meter, 4,000 to 5,000 square meter, with an average of 25 square meter per unit. Then this what I've seen in many cases is this size, 400 to 500, 25, 100 bed to 200 beds, merging some co-working spaces or local areas, some services, and those models are working well today. Yeah.
Okay, thanks.
Thanks, Fran.
All right. So let's see. Cool. We still have a few questions open. I want to.
Brian, we had a comment of Brian. Could you tell us a little bit how it's going with 65 co-living unit? If you hear me, Brian, it's a good example.
Let's see, Brian. Do you want to share?
Yeah. No,
Maybe not. It says host.
A host.
Can you guys hear me?
Yeah. Hi. What's up?
Hey, what's going on, guys? Yeah, so I'm Brian Rios, here from Louisville, Kentucky. I started my co-living business about 5 years ago. I had no idea that there was this huge co-living empire around the world. I thought I was like the first one to think of this. But yeah, in 5 years, I've managed to get up to 65 units here in Louisville, Kentucky, and Southern Indiana. My business name is Hobnob Co-living. So Hobnob, just the word hobnob without the K means people of higher social status coming together and socializing. So I decided to just add a K and like a little house at the beginning with a green circle around it. We've been operating 5 years. The first 3 years was a huge learning curve. But just here recently in the past 2 years, we went from 30 to 65 units. And my goal in the next 12 months is to double in size.
And are you comfortable with a 65 unit now?
I mean, right now our biggest house is 11 bedrooms. We have 2 of those 11 bedroom homes. I had to hire an in-house property manager once I got to like 30 units because I was doing all of the property management, My mom and I were doing all of the cleaning because we clean our houses every 2 weeks. My dad and I were doing all of the remodeling and the renovation work. So I was literally working 18-hour days, 7 days a week. But once I got to that 30, 32, 35 unit mark, I started making enough profit to be able to hire a property manager, to be able to hire a cleaning crew, to be able to hire a remodeling crew. So right now, I literally only go to all my properties every Monday and do like 5 to 10 hours of maintenance, if that. And I mean, I love it. I'm cash flowing 6,000 after all of my bills are paid, and this is literally the only thing I do. $6,000 a month after all my bills are paid. So I mean, it's going pretty good now, but that just happened this year. The past 4 years, we were losing money or breaking even. Yeah. So I mean, once I got to 65, I've been making a little bit of money, and I'm not going to stop there.
And do you have short-term or long-term stay? What is the average places?
So our leases are month to month. Our average stay is 8 months. Our longest tenant is 2.5 years. Yeah, but we're month to month. So we get a lot of travel nurses, and they know when their contract starts or when their contract ends. So as soon as they move in, they'll let us know when they're moving out. But a few people will actually just stay with us for a month. Not many. But they like that month to month flexibility, right? And it works for both people. Like for us, if they're a bad tenant, we can just choose not to renew their lease. And if they feel like we're not a good fit, they can just give us a 30 days notice and everybody goes their own way. So it works month to month. It's a lot more movement, but we've gotten really good at flipping the units when we need to. And we have a system, my cleaning crew, my property manager, and myself, and the maintenance crew.
Okay. Thank you for sharing. Is there anybody in the room who has between 50 and 100 units? Beds?
Actually, Julien, because I know you raised your hand for a bit. Maybe Julien, you can share. That'd be amazing. Let me ask you to unmute because we can't hear you yet. Perfect.
Hello, everyone. Yeah, I'm a co-founder of a company in France called Open House, and right now we have 140 units, so just above the 100 barrier. You mentioned we are not yet profitable, and this is the goal. And we are specialized as the previous intervenant in small units. So we are renovating big houses or small buildings. And we are trying to go up to the beyond the 1,000 square meter barrier to grow and to be profitable also.
And where are you located, Julien, in the cities?
In the greater area of Paris. Not in the core, not in downtown, of course, because the prices are crazy in terms of. We are both investors and an operator. And also we are in a small city outside of Paris called Fontainebleau, because there is some nice school there, the INSEAD, pretty famous, and also in Lille, in the area of Lille, and we are trying to now to expand also to other cities, but yeah, we are struggling with some costs too. This year all the gas and electricity cost was quite tough for us, and so it's interesting to see that there is also a different model. We are committed to our own PropCo with a long-term lease, and sometimes it's tough to indeed to find the good balance between their interest and our interest. Exactly. So it's quite interesting to see that. For last month, since the beginning of 2023, we were trying to convince some investors to go with us as solo operator. I mean, we would be operating also without be owners. And as you mentioned, I think we don't have yet the size that we reassure them, and so we are quite struggling to do that.
That's a difficulty.
So yes, my question has been answered previously. So yes, just to
One question, Julian. When you have some investor, if you have been discussing with them, how many months they ask you of guarantee?
Between 6 to 12.
6 to 12.
Yeah, and that's something that when we raised money for the operating company, the goal for the right number was designed also to make sure that we will be able to provide this money. But until now, we haven't found we haven't signed any contract where we had to give this money to the investor in terms of guarantee.
Mm-hmm. And
So, yeah.
how many employees do you have for 120 bed now, full time?
We are 4 employees now, and the rest of it is interns, of course, and so that's a small company yet.
Yes, it's related to the numbers we've been speaking about. And if I ask you, what about the part of the rent and on your revenue? Is it 40, 60%?
I think we give back in terms of revenue. We give back 60% to the PropCo, and we keep 40 for ourselves.
Mm-hmm. Yes, that's clear. Classical.
Yeah, classic.
Thank you, Julien, for sharing.
Welcome. Thanks.
Thank you. Okay, let's give the chance to a few more folks. Daniel, I'm going to bring you on because you've been waiting for like 20 minutes.
Yeah.
Now. Hi.
Thank you. Hi there. Greetings from Portugal. So I was hooked on 2 things. So first, if I heard correctly, that there was an expectation of a EBITDA on 30%. This is from the investor perspective and
operator's perspective.
From the operator. Okay.
Yeah, 30% is also operator. I think
from the investor side, what would they be expecting? So everything without financing costs, let's say.
What do you mean without financing?
Everything without mortgage payments. So everything included.
Mm-hmm. Then the yield.
So the yield, I would see it more like a return on investment, in which they would look at cash flow, right? And they would factor in the mortgage payments. But without the mortgage payments, let's say that we have everything, like with the NOI and any costs that they might have on facilities or staff or whatever may be, or in outsourcing the operation. How much are they looking for just on EBITDA? From the investor point of view?
The EBITDA of the investor, it's really dependent on the kind of investor. If you're speaking about institutional investor or private investor, middle size, it's really depending the typology of investors. It's easier to tell you about the yield they're looking for, and it's different between the size of the project and the location also.
Okay, sure.
The way they calculate is to pay the mortgage, of course, and to see as well with the contract you have with them. If you have a long-term commercial lease, they will think about the actualization of the price during the years, which could make the captation of the inflation, and they are thinking about the asset himself. What will be the value about the asset in 9 years, 10 years? Then they generally plan, for example, like many business plan today, they are planning like 2% each year. They earn 2% of the value of the assets. And the most important, one thing very important in the contract is the calculation of the new rent for the operator. Is it parallel to the inflation, to the value? Then this is a tricky point today.
And for like a mid-sized co-living, let's say like 25 rooms, and an investor that would be comparable for those kinds of investment, how much of a percentage would you say from the revenue that they would take after rent and after everything?
They will take 40 to 60% of the operator revenue.
Got it.
But if you are speaking about 25 bed, it's a small investment, and you will find small investors, families, for example. We know some models. I don't know if open house is like that. Some people who made an agreement with a family business. a family fund to invest and they operate.
Got it. One last question, if I may. Do any of these models, in terms of the operation, shine more in terms of profitable? So, from what I've been reading, the leasing model does not really produce profitable companies. So many of them are like playing a brand game in which they're more focused on growth instead of profit. Are there many examples of companies that do the leasing model and that are actually profitable? And do they outperform the ones that do the revenue shared?
Not sure to get the question.
Do you have companies that do leasing? So traditional leasing without owning the assets, and that are profitable, and can they perform even better than the ones that do revenue sharing?
To my experience, what I've seen as the best model with about in 10 years was a company doing both investment and operating in both sides. Because as you say, many companies are leasing and the idea is not profitability, is to get to be big in a short-term period, like a startup. But it's what I've done. We've seen that with quarters, with many companies. But when it's not like, I think the problem is not a digital job, then it's not like a SAS model. You build something and you can scale it by millions easily. The problem is that you have physical space, physical problems, people. Then I've not seen many successful companies growing very quickly, operating thousands of rooms in a short term. But there is interesting examples. So look what is doing today, Habit. If you know them, they have been buying quarters, they've been buying common in US. Then they are really in this idea to have investors and to have the biggest size in the market, but we don't have yet the results.
Okay. Thank you so much.
So, ladies and gents, it's literally 6 o'clock, but Jimmy, yes, I want to have you because you've been also waiting for 20 minutes. Maybe let's do it super short before everybody goes. But Jimmy,
okay, super short. So hello everybody, super short. Just wondering what software would you guys recommend for let's say 60 beds company? We're based in France also, by the way, because as you said earlier, we struggle to find something that's useful for both short-term, mid-term, and long-term.
Yes.
Guy,
I mean, look, there's I guess software. So first of all, we're gonna have a whole dedicated session on technology in like 3 months from now, I think January or February. There's different ways to there's different types of software. You have PMS, community engagement apps, etc. Look, there's a bunch of stuff out there. When it comes to PMS, like what's really hard to find is a software that really does everything. So, or you like split it up in terms of like property management software, communication software, invoicing, accounting software, or you like find one that does everything. If you split it up, some of the PMS that work really well, Res Harmonics is used a lot. The House Monks is also being used. For more integrated platform, there's one called Lavanda. That's also pretty strong. There's Vitco. And then as somebody put also, like you can just build your own stuff. But as you said, starting like 50, 100, then you're gonna need something that's more scalable.
Robust.
Thanks a lot.
So you're welcome.
Yeah.
You're welcome. So I guess with that, Fabrice, thank you so much for taking the time.
Thank you, Guy, for the invitation.
It was a real pleasure. Thank you everybody for being here. I know that there's a lot of questions that we haven't been able to tackle. So I just posted our WhatsApp group in the chat. I'm going to post it right now again. We're going to open up the chat for discussion in the next couple of days. That would be like one way to also like continue a discussion. feel free to also reach out if you have any questions. And I guess the conclusion here is this, right? Like there's a lot of, it's really hard to give one answer to all of these questions of like, what should be the model? But it is very dependent on your locality, on the type of business that you're creating. But there's a way, and I'm really glad also today that we had like some fellow co-living operators that also confirmed that around like 50 to 100 started breaking even. That seems to be a good number. And yeah, thank you. I hope
Thank
you
you
all
very
learned.
much.
Feel free to give us feedback. We'd love to have you on the next one, and we wish you an amazing day. Thank you, guys.